Good morning, everybody. It's Mark. We're back here for the morning call. It is Friday. So we had a jobs report today. Better than expected on all fronts. Market is up. I don't think it really mattered. I don't think really anybody was really paying too much attention to it at this point in time. But we are up, gapped up a little bit this morning. The bid is under this market. Obviously, the fiscal cliff is hanging over us. Indecision from the politicians is hanging over us. But the market still seems to be, drudging higher, albeit with lots of thin action and lots of back and forth action taking place. So you just got to be prepared and really set it up. We have the spiders right now we're looking at. It's steadily hanging in there, and obviously after today, it's been consolidating for a nice week and a half, moving off that overbought reading. And as of yesterday, it was almost to the flat line. Looks good, looks healthy, looks like it digested for a nice week or two, and it looks like we're ready to move higher. Understanding that the headline news can change it any one time, and there's lots of rotation that's happening in this tape. But just by looking at the technicals, it looks like we've consolidated, and a nice little bull flag is forming on the spiders. And I'll put up the cues also, so you can just see what I'm talking about. Not as bullish, and I think part of that is probably because of Apple, but it's still hanging in there, and for the most part, it's hanging above its 200-day moving average. Has to do a little bit more work, but it still looks good. Let's take a look at a few charts. Obviously, we'll start off with Apple because it seems to be mentioned everywhere. CNBC, every other minute is about Apple, but it's the stock to watch. Obviously, has it lost its luster from a fundamental standpoint? Has it lost its mojo? We'll have to wait and see. Certainly lost some momentum, and as of yesterday morning, it was terribly bearish, and even in the AM, it was down something close to $17. And I'll just put up a 13-minute chart just so you can see the intraday action. Hit around 520, maybe a little lower, 518 and change. Bounced tremendously, and now it's basing, above the 545 level, 540 level, which we'll probably try to gain some sort of rally. This bar is good. Technically, it is a higher low, which technically is good, but it's still a broken pattern that needs lots more times. But understand, from a trading vehicle, 1%, 2% in the stock, it's going to move $10, $12, $15 every single day. So there's trading opportunity for you to take advantage of it. Using 540 on the long side, breaks 540, you might get some more downside. And on the upside, you're probably going to look at 560 as some resistance, at least temporarily. So it's going to create a new travel range, a new trading range for sure. Keep it on the radar. Technically, on a macro sense, it still needs lots of work, and it is a bit of a broken pattern. Doesn't mean it won't, go up or down intraday. Stay flexible. Google, still in the high betas. Nice consolidation. A little bit, 1 or 2 more days of this consolidation back and forth above 695. Maybe it's going to try to regain some composure above the 50-day. We'll have to wait and see. So above 701 and see if it can get above I think it was 704 level. It needs a few more days, but I think it's nice how it's sitting here. And end of year rally might be in the cards. We'll have to wait and see. Amazon, the stock that doesn't seem to go down yet, the highest P of them all, but it's a great story behind it. Technically, it's probably the best looking chart technically, and it's actually now beginning to give you an opportunity to, at some point, get in. I do think it's a little overextended. I'd like to see lots of digestion. I'd love to see some downside action in it. Not sure it's going to happen. Keep it on the radar. Not really a key buy point. Certainly not an A-plus trade yet. Another few days of basing up here, and then breaks through 255, 256, 260. A nice $4 trade will be in the cards, momentum-wise. But overall, it's just a back-and-forth digestion right now. Same thing with price on. I just put the basically the 4 horsemen up there. Nice digestion. Few more days of this back and forth. Maybe today above 670. Possibly tries to make that second move to 700 and can do it with some authority. It's on the radar, and I think it looks good technically. Netflix, stock everybody loves to hate. Was the boy who cried wolf a few days ago until it actually finally made that move. Now it's consolidating at these new high levels, and every time it gets around 80, 84, 85 to 83 to 85, seems like the buy area. So that's what I'm looking for. It seems like one day down, one day up. I would expect some more digestion to happen. That's what would be not healthier for it. We'll have to see it happens. It looks like it's going higher. It looks like $100 is going to be in the cards at some point in time. I've been saying this market, one day we're up 100, you can't figure out why we're up 100. The next day we're down 30 for a little bit, you can't figure out why we're down. It's rotation, and that's what's happening. We keep rotating, we keep moving from one sector to the next. One sector is great, the next sector is bad. So I think the key is understanding, doing your work. Obviously, 2 days ago, we had Bank of America and Citigroup, huge for the financial point of view, financial sector. Up and at them, they look like they have more upside. You know, Bank of America, wouldn't be surprised to see 11, 11.20 by the end of the year, minimum. Citigroup also has regained composure after a tight pattern. I wouldn't be surprised to see the top end of the range, which is above 38. Not much further there, but keep it on the radar. That might mean the JP Morgans, the Goldman Sachses try to wake up, Morgan Stanley try to wake up. So keep them on the radar. Goldman Sachs still pretty lackluster, but we know how that works. One day can wake itself up. Obviously, the top end of the range is 121. Bottom end is really right around here, 115, 116. Technically, it's just hovering, so it hasn't given you an actionary trade more than a tier position to keep on the radar. But if it starts to get volume above 120, certainly keep it on the radar. That might spark the move to 125 short term if we can hold this uptick. Home builders, I was talking about 2 days ago. I don't love how the Toll Brothers. This is a technically, you know, almost an A-plus pattern after the fact of this gap up, closed pretty much as negative as you can be, and I think on the following day didn't even gap down much, and then just came in, and the XHB, sorry, same type of factor. It means we need more digestion. A little back and filling is healthy, and maybe the run for the year is over, even though it doesn't normally work like that with end of year plays that are strong, the strongest sectors. But we'll have to wait and see. Not quite sure. The jury's still out. Biotechs taking turns. REGN seems best in breed in my opinion, basing up at these levels. AMGN still looks nice. GILD to name a few. Top biotechs that I'm looking at, best looking charts, top third of the trading range. We'll have to wait and see what happens. PCYC I would put in that category. It's just they're challenging to trade. You just got to be respect the fact of what they're doing and how they're reacting accordingly. And that's where we're at, guys. We're in this tape that the retailers also, I think you could pick and choose. Obviously, Lulu had a great day yesterday. Huge range, basically breaking a downtrend with earnings, with some authority, a little basing up here, possibly tries to make a new high, at least a few month high in the next few days. And I've been looking at, Nike. I actually put Under Armour to work yesterday. These stocks, I still look at the best in breed at the, at nice consolidation levels, and Under Armour is one of those plays against 50. I think it's around 52, 53. Risking $1 to $2 to make $4, it's a good risk versus reward. It's what I look at, it's how I trade, and technically they're setting up. Same thing with Nike, very tight pattern, maybe tries to make a move towards the end of the year. Not involved with it yet, but it's a best in breed in my book. Cores, I'm going to put it in the same category, a best in breed in my book. We'll have to wait and see. That's where we're at right now, guys. This market, definitely thin. Definitely headline related, but it seems like there's an underlying bid associated with the market, regardless of the ebbs and flows that you're getting with this tape. And I think that's important to recognize. We are getting the ebbs and flows. It is not necessarily directional. It's still consolidating to figure out which direction it goes. But stocks are rotating more so to the upside than the downside from a sector perspective. And to me, that just means, we should grind higher. And that's how I'm approaching the market. I'm willing to short, willing to I'm taking much quicker profits than I would have 2 months ago, but at some point in time, I think you're going to get some resolution to this fiscal cliff before the end of the year, ideally. And then you'll get an ultimate bid, but I think you got to be smart enough and understand it could be a sell the news type of reality. I think you have to be a little bit long, a little bit exposed at this point in time, understanding that there is some risk associated with it, but when it all finally comes out, it's gonna run away from a lot of people. And that's how I'm looking at it. Not so easy, but be prudent. Don't spread yourself out so much, and I'll talk to you later. Good.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.